Fall 2025 housing and economy. Sustainability meets slowdown. Where do things stand at the end of the summer, the first few days of fall? What falling inflation, a cautious Bank of Canada, and a buyer tilted GTA market mean for the real estate market in the final quarter of 2025? Welcome to another episode of helping you build wealth through real estate, brick by brick. I'm Nico James-Bock, a broker at Keller Williams Co-Elevation Realty in Toronto and founder of the CondoWiz Group. When we look at Canada's macro check-in, end of summer 2025, we're looking at inflation. CPI at positive 1.9% year over year. This is August 2025. Stats still below the 2% to 3% range that we were in for most of Q1 and Q2, basically the first half of 2025. When we're talking about growth, the real GDP is plus 0.2% month over month. These are July 2025 stats, the latest for GDP. After 3 weak months, there was a flash for August 2025, and it was roughly mostly flat. When we're talking about jobs, unemployment at 7.1%. Again, August 2025, the end of August, there was the unemployment stats. The youth jobless rate was quite elevated. Bank of Canada strategy. The policy rate cut to 2.5% on September the 17th. The next decision is October 29th, alongside the monetary policy report. What's the signal? Proceed carefully. Watch inflation and growth. The chart that I'm showing shows inflation at the 1.9% level, as well as the GDP up 2.2%. And these are the unemployment rates across Canada, with an overall rate of 7.1%, which is up 0.2%. Sustainability and supply chains. Pressure or progress? If we're looking at global logistics, they are mostly normal once again, but geopolitical and trade frictions can still ripple into prices and growth. Manufacturing is wobbling. StatsCan Flash suggests August factory sales at 1.5% month over month, highlighting soft external demand coupled with trade uncertainty. And these are brought about, obviously, by the tariffs. There were new tariffs announced just at the end of September. Why this matters to investors? Well, calmer supply chains help lower inflationary pressures on goods, giving the Bank of Canada room to ease, which supports cap rates and affordability. The next interest rate announcement is Wednesday, October the 29th. Will it be another rate cut? The GTA market pulse for the end of September, demand versus supply. So these figures wrap up August and the first half of September. The stats indicate sales are up 2.3% at 5,211 units. New listings, 14,038. That's a huge jump. Again, these are August statistics. Active listings are up at 27,495. Average price sitting at $1,022,000, down 5% year over year. You can review the stats in detail by going back to my previous podcast episode at the end of August. Sales to new listings ratio, 37% and 5.3 months of inventory. This is average overall. including all asset classes. So freehold, detached, semi-detached, as well as condominium. It's the condominium sector that is inflating the months of inventory. These are buyer-leaning conditions. The September stats will be out in a couple of days. I'll have those for you. Preliminary numbers, however, show further softening as we head into the fall market. Remember, this year marks a record number of completions. Okay, we're still feeling the pain of that as buyers stay away. And that inventory that's languishing is not getting absorbed. It'll take time, roughly 12 months time. So we're looking forward to approximately a year before the inventory is absorbed. The GTA Market Pulse indicates the prices, which I've just mentioned. So this is a chart that breaks it down by asset class. So detached, semi-detached, townhouse, condo, apartment. It also breaks it down by region. So 406 and 905. The demand versus supply shows 2.3% increase in year-over-year residential transactions, a 9.4% increase in total new listings, again, year-over-year. We turn our focus to fixed rates, bond yields, and what to watch for come October 29th. The 5-year bond yield sits at 2.76%. That's as of late September, an anchor for fixed mortgages. Remember, it's the bond yield that establishes fixed mortgages, whereas the Bank of Canada interest rate announcements mostly affect variable rates. The average 5-year fixed rate is now sitting at roughly 4.7%, so 4.68% nationally. Large bank specials are offering 4.59%. Variable rates range from 3.6% to 4.2% now, depending, of course, on the lender. What this means, if the Bank of Canada guides to more easing on October 29th, watch for further drift lower in fixed rates. So we're looking for fixed rates to trend downwards via bonds and improved qualifying. But spreads can widen if risk sentiment on the part of buyers and investors turns. When we look at the Bank of Canada's interest rate announcements and where interest rates were as of April 10th, 2024, they were at 5%. Gradually, that was at the height of the policy tightening from the Bank of Canada. So 5% was the highest it reached post-pandemic. And then there's been gradual decline in the interest rates. We're now at 2.5%. Build more homes. Another hot topic and one that was covered in detail during a previous podcast episode. Go back to that episode to get a full breakdown. This is a summary of what the federal government, Ottawa, is doing right now. We're looking at number one, Canada Housing Infrastructure Fund, CHIF. It's $6 billion over 10 years to accelerate critical water, sewer, and enabling infrastructure. 100% GST HST rebate for new purpose-built rentals. So construction that started after September 13th, 2023, and that will complete before 2036. Apartment construction loan program. We're looking at a more than $15 billion top-up in budget 2024. It added set-asides for above shops, so those that are located above retail units, and prefab innovative builds. So that is in the 2024 budget. Public lands for homes. Federal Public Land Bank and $500 million acquisition fund to unlock sites for building, lease not sell model to keep units affordable. Use these programs to underwrite purpose-built rental pro formas, so stack CHIF, ACLP financing, and the GST rebate that I just mentioned at 100%, and watch municipal HAF deals for local incentives. There you have it. It wraps up another episode of helping you build wealth through real estate, brick by brick. Remember, information is power, especially when it comes to your financial future in real estate. As we head deeper into fall 2025, the mix of easing rates, government housing initiatives, and a buyer-friendly GTA market gives cautious optimism, reminding us that with the right strategy, today's crossroads can still open doors to tomorrow's real estate opportunities. We'll see what the terrain will look like when we go over the September market stats and after, of course, the October 29th Bank of Canada announcement. There are other announcements during October, more specifically those related to inflation. The Bank of Canada will be looking very closely at that before it makes its announcement on October 29th. If you found this information useful, then like this podcast and or leave a comment. I'm always interested in hearing what your take is, what your opinion is of what's happening in the marketplace. Do you have a mortgage renewal coming up? What's your job situation like? So please share this episode with anyone who may find the content useful. Ciao, ciao.